Welcome back, everybody. Trading Nevesh here. In today's video, we are back with another trading recap, breaking down the sell position on MNQ. Now, this was on the 15th of April, and the entry time was the 13:07 based off New York Eastern Time. So starting off, the model that we were trading today is called the VI trading model. This is short for volume imbalances. Now, we also do have extra tools within our arsenal, but today we are breaking down the volume imbalance. So before we begin, we need to understand what time of day are you going to look for buy or sell positions. The times of day can be within any single hour, and it's going to be the first 15 minutes and the last 15 minutes of every single hour. Now, I do want to preference only some are high probability. Do make sure that your pair is volatile within the macro windows you want to trade. So today we were looking at 12:45. Okay, so that's the last 15 minutes of the 12 and the first 15 minutes of 13:15. So we can see we've got a half an hour window to look for buys or sells. Now, why did I even take a sell? This is going to come down to the 4-hour time frame. So going over to the 4-hour, we see the first thing you need to do is mark out the 4-hour highs and lows of the previous candle. If we sweep the high, price is now in a premium and we want to sell back down because it's expensive. If we sweep the low, we want to buy because now we are in a discount, so it's cheap. The next step, we're not just going to sell or buy because we want to make sure, okay, if we sweep the high, we don't want to be buying into a bullish fair value gap. See, the opposite is true. If we sweep the 4-hour low, we don't want to be buying into a bearish fair value gap. So what do we notice now? Moving that back, price has swept the 4-hour high and tapped a 4-hour bearish fair value gap, really validating our bearish bias. So dropping back down to the 1 minute, let's go and discuss order flow. So on the 1 minute time frame, what I analyzed was, okay, I'm bearish. I now want to see, is order flow on the 1 minute bearish as well? Now, all order flow means, are we delivering from bearish gaps and are we disrespecting bullish gaps? So clearly we see that the market has a bullish gap here. It got disrespected. We also have a bullish gap here. It also got disrespected and the cycle continues. We're clearly showing signs of selling momentum. But we also need to make sure, well, are we respecting bearish gaps? Where has price delivered from? Which was here. We look to the left, we are inside a bearish fair value gap. Great. Now we have bearish order flow aligned with the 4-hour time frame. All you're going to do now, if we play to the start of the macro, you're going to wait for price to pull back to a bearish fair value gap. So let's just keep replaying here. So in real time, I'll break down what I was looking for. I was looking for price to come back to any single one of these. It doesn't matter which. None of them came back to that area though, but we keep playing. There was no retest of a bearish fair value gap until this here. So on this candle, I was actively looking for a sell position, but price closed above the gap. Using the VI model, we're not going to try and predict which bearish gap's going to hold. We're going to wait for price to close inside a gap or reject the gap and close outside it. Regardless, we need to see the gap be respected first. We're not guessing. So we disrespected one gap. Now it's a little bit of a red flag. I am anticipating maybe we are going to see a reversal because we shouldn't be disrespecting bearish gaps if order flow is correct. Now, an important rule. You have one chance. The second gap is now your last chance. You have two chances, sorry. The first gap and the second gap, the rest of them indicate signs of bullish order flow. So I'm not interested. So we see here we've inversed one. We've also had an accumulation. Now we have manipulation and we are really anticipating the market to distribute back lower. Okay, that's a little bonus for you guys. AMD, which is where price accumulates. We then decide to manipulate either up or down. If we are bullish, we want the market to go down, liquidate buyers, entice new sellers to enter, and then we can stop out both parties. So in this instance, we are happy now. Okay, we broke the accumulation to the upsides. New buyers will enter on the breakout. Sellers get stopped out above these wicks. We can now distribute back lower, take out the original buyers. Let's keep pressing play. We're now closed inside this bearish gap. I'm really anticipating we're going to break through this gap until this next candle. I want you guys to really pay attention to here. See how price closed higher and opened lower. This is a bearish volume imbalance. It indicates sell side momentum, and we should see an influx of volatility to the downside, especially now we've seen this inside a bearish fair value gap. Okay, we've added in all the confluences why we should be bearish. We swept the 4-hour high inside a bearish gap. We have AMD aligned with our bias. We're inside a gap. Volume imbalance closed lower. I actually took a position here off the CE of this wick. So this wick is the wick high of the actual move higher here. So I seen that the market opened lower. I did want to originally place a sell immediately, but price gave me somewhat of a better entry anyway, right around the CE. I'll pop up a screenshot on the screen now. So let's go and discuss stop loss placement. We are now in the position, we've met every single requirement. Stop loss placements will be 5, 10, and 20 points. 5 points, is it viable? Maybe just, because we want to make sure your stop loss placement is either above the wick or above the bearish gap. So we are above the bearish gap and the wick. This was just too tight for me. So I chose 10 in this instance. I thought that's a safe stop loss. The targets will always be a 1 to 2, and then the closest fair value gap, swing low, equal lows, or AMD. So we got the original accumulation here. In this instance, I went for the AMD, so a little bit past our normal 1 to 2 target, but I had high conviction that we would go down because we lifted out many confluences of why we should sell here. So let's press play. My final target was actually based around the accumulation, but not just the accumulation, it was the CE of this order block, because that gives me a rough gauge that we shouldn't go any lower, or we could at least retest without going any lower. So I want to get out of the position around here. And it does eventually keep dropping to the downsides, and we could have held, but we're not interested. We got our piece of the cake. So that was it. We made roughly just under $500